Good morning. It's Barry Manis with comments on waste management, WMX Technologies, as it's now known. The stock sold off late yesterday afternoon, really, in an acceleration of volume, and I just wanted to make three quick points on what happened yesterday. First of all, I think the event that really sparked the stock coming down wound up having a disproportionate impact because a downgrade by Lehman, which I'll comment on in a moment, really pushed the stock through a very important resistance level at about 29 and a half or 29 and 5/8, a resistance level that had been tested several times over the last year, particularly over the last 3 or 4 months, and had always been very strong in holding. And I think the quarter to half a point that this downgrade probably would have taken out of the stock on its own merits happened to include that important resistance point, was enough to put it through there, and that's why the stock went off to the races on the downside from there. Three quick points about this. Number one, I think the one real risk and real disappointment out of this event is that there's now a real chance that rather than the stock sitting in the 29, 30, 31 range, which is what we had anticipated, until we get some better earnings comps toward the middle of next year and see the stock move toward the high 30s, there's now a very real chance that instead the stock will sit in the 26, 27, 28 range, and I wouldn't be surprised to see it slip down a little bit further today given that resistance level and how important it was. So the level we need to sit at now and be patient from is that much lower. That's the one real disappointment here, but I would make two other points on the other side of the ledger. Number one, this downgrade certainly raised nothing new yesterday. It talked about issues that have been out there for some time, the disaster at Chem Waste, increased competition in the solid waste business, a tougher balance sheet picture for WMX, all of which have been known and discounted for a while, and the timing was kind of funny as well because this downgrade was made in the middle of the afternoon, even though there was no specific event pointed to for that intraday change of opinion. So I don't think in and of itself that carried a lot of significance or brought anything new. Finally, and more importantly, I actually spoke with the company earlier yesterday and picked up a piece of news that I was very encouraged about. I'd mentioned in the last call that as of October 1, Waste Management began initiating what would be the most aggressive price increase by any of the solid waste companies in the last 3 years, of about 3 to 5% across. They haven't said exactly what part of their customer base, but they have said the vast majority. I was calling yesterday just to find out whether on next week's conference call along with earnings we would get some early indication on how the price increase was doing. And I was told that there is an early indication, and it's positive. The company is pleased with how customers are receiving the price increase so far. Obviously it's early, but that this message would be imparted on the conference call next week. Now, that really speaks to the most important element that we're optimistic about in the story, which is the turnaround in the core North American solid waste business. Only something that really broke that story would make me question my stance on the stock right now, and the only piece of evidence I've gotten on that front lately, which was this indication on pricing yesterday, was positive. Therefore, while it's disappointing that the level we're going to have to wait at the stock now seems like it's going to be a couple of points lower for the next several months, I don't see any reason to change the overall buy recommendation on the stock. The company is going to report after the close next Tuesday and hold a conference call on Wednesday morning. Our estimate is 45 versus 43 for the quarter. I think there's a chance, 45 versus 44 for the quarter. I think there's a chance that we might be a penny high in that estimate, but there are a lot of 44-cent numbers out there. Let me just also briefly add that Wheelabrator Technologies, our other purchase recommendation stock, will report after the close on Monday and hold a conference call Tuesday morning. Our estimate there is 22 versus 18. I'm very confident the company is going to meet the estimate. And not so much the earnings itself, but I think the conference call that goes with it could be an event to get that stock moving back upward again. There is a note up today anticipating both the earnings release dates and a thought on all of the earnings reports upcoming in the group. And I'd just like to add one final point, which is that about a week and a half ago, a first mailing to clients on our environmental services seminar went out. So far the responses have been coming in slow. The planning for this was delayed a little bit by my move over here, and therefore it's not going on the amount of lead time as usual, so I just wanted to call it to your attention. The environmental seminar is December 8th through 10 at the St. Regis Hotel in New York. Everybody on the sales force should have received a hard copy of the invitation. If you haven't, please call me on 7865. Your help in getting turnout for this would be greatly appreciated. Any questions? Thank you.
Hi, this is Amrita Sen calling for Larry Kirsch on Bausch & Lomb. We had some comments in the third quarter yesterday, but the details of the third quarter are that they were 93 cents, they were up 12%, they were in line with our estimate, but they were below the consensus estimate of 95 cents. The quarter did reflect tough economic conditions in Europe and Japan. The stock was up 7% yesterday, and with that, we think they are fairly valued for the near term. The shares were up by the prospects of a year-end approval for several drugs to be manufactured at the Tampa Generic Drug Facility and a renewed focus on improving the company's operating margin over the next year. In light of these announcements, we remain optimistic that Bausch & Lomb can grow its earnings 13 to 15% in 1994. However, the fourth quarter still remains a hurdle for the company. The international economies are not likely to improve dramatically, and sunglass profitability is still at risk until the company can implement cost savings programs. The shares are trading at 13 times our 1994 estimate of $3.70, and we continue to rate the shares market performers. Other points from the conference call. Despite the weak global economies, Bausch & Lomb still expects to drive future earnings through gross margin improvement. In the third quarter, gross margin increased 170 basis points to 55.9%. The improvement in the margin was driven primarily by increased profitability in contact lenses. Furthermore, the company has quietly undertaken a program to cut manufacturing expenses. The company indicated that it intends to reduce contact lens manufacturing personnel by about 200 to 400 people. And since the majority of the workers are temporary, we do not expect a charge to result from these reductions. Additionally, the company plans to reduce sunglass operating expenses in an attempt to maintain profitability. Okay. The only other point I want to make about this is that for the near term, we do believe that the shares will be market performers. We are not ready to step up to market outperformer until we feel that the international economy begins to recover, until we get further notice of the generic drug facility approval in Tampa, and further improvement in profitability in the contact lenses. Any questions? Thanks.
Capital Markets, you there?
Quick announcement here. The TDA International sales call will take place today with Steve Dobie at 4:20 in conference room 28E. And secondly, the Crestar dry run will take place tomorrow morning at 7:30 a.m. in dining room number 2 on the 30th floor. Please dial in on extension 0990. Anything else? That's it from Capital Markets.
All right, thank you. Make a comment on Kellogg. It's on the recommended list, as you know. In addition, we do have comments on American Health Properties. Hold on. Hello. Hi. Yeah, you want to go? Go now.
Hi, this is Matt Fassler on Heilig Myers. We continue to rate the stock a moderate outperformer and have no change in our estimates of $1.05 for fiscal 93 and $1.25 for fiscal 1994. Heilig signed a letter of intent for the acquisition of McMahon's Furniture Company, a 92-store chain based in California. As we said before, this chain focuses on small towns and is promotionally and credit-oriented, making it a good fit for Heilig Myers. Thanks to the struggling California economy, Heilig will acquire this chain at a favorable price of $65 million, net of real estate and receivables. This translates to 65% of sales versus a valuation of 200% of sales for Heilig Myers, and on a PE basis, the price is about 20 times.